Welcome to Finance 345. My name is Richard Ellison, and we're going to be digging into the January effect on stocks. But before we do that, I'd welcome you to make comments and suggestions for future videos in the space down below. If we look at the January effect, it's more appropriately called the small firm in January effect, and this is the tendency of smaller stocks to outperform to start the year. The trading phenomena dates back to at least 1925, and it's been studied a number of times. Just to clarify, when we're talking about small firms, we're really looking at Russell 1000 or Russell 2000 stocks rather than your S&P 500 names or other large capitalization stocks such as Apple or any of the FANGs. Now, there is a fairly strong argument that this effect has decreased in recent years, and that falls in line with an efficient market hypothesis that's telling us a known phenomenon should be reduced over time. But there still is evidence that it's in place, and you could make some money from looking into this. If we look first at the argument that this effect has just been washed away, it's saying that since people are aware that smaller stocks are going to outperform in January, they would look to get ahead of this and be buying them in December. So our January effect would become the December effect, and eventually it would just disappear. But there's still some evidence that it's in place, and there's a few reasons why this is happening. Oh, sorry. Just before we get deeper into that, I do have a friend who's a lawyer, and he suggested that I read off a disclaimer about this not being financial advice, but instead I've just printed this up. So if you could read this carefully, that's probably the best thing to do right now. Okay, moving right along now. I've taken care of those formalities. What are some reasons why there might still be a January effect and how you could profit by buying smaller firm stocks to start the new year? The first reason is tax loss selling. So that's when investors are selling their stocks that underperformed or caused them a loss during the preceding year. They've sold it to crystallize their loss for tax purposes, and that has put downward pressure on those particular names. Because of this, if we think of it almost along the line of a mean reversion, the stock has underperformed, there's been selling pressure, the tax loss selling has ended, and that means that it may actually be ready to go up in January of the following year. And a few of these reasons are that there are investors out there who are looking for stocks that may have been pushed down because of tax loss selling, so they'll be buying them in January. People after a 30-day period may be buying back into positions they had because they think that they're going to go and still be a good name to own. And we do get certain performance with things that have lost value for a while. Often there's a change in management or the company pivots and does something else, so it may actually be back to a good return or even a really positive return because of some sort of change that they've put in place in reaction to the previous underperformance. The next reason that may be supportive of the small firm in January effect leading to outsized returns is what I like to call the New Year effect or a financial physical fitness. Much like people around the start of the year, they start making New Year's resolutions and they think, okay, I'm going to get into physical shape. Often people say, okay, it's time to get my financial house in order. People look to make investments. Other people get into the market even for the first time. So they're going and they're looking around and they're going to be purchasing stocks or index funds, and that provides an incremental bid, which also supports some of these stocks. And the third and final one I'll speak about today is just year-end bonuses or extra money that's left around at the end of the year by people who are saving. They may look to put in the stock market and buy stocks to start the year because they've gotten a bonus at Christmas time or it's paid in at the end of December or even into January, and they'll be purchasing that. And the next question is, well, why is this just affecting the smaller stocks? Shouldn't this move Apple or something that's really large? Well, the issue here is that a bit of incremental bid or these three reasons, they have much more of an effect on a smaller capitalization stock than they are on a really big stock. Also, the market for small caps just isn't as efficient. They're not covered by as many firms. They're not as invested by as many people. So a move there can tend to be larger than it would be for one of your large cap or mega cap stocks. Now, I'd heard of the January effect as far back as the late 90s, which is really when I first got into looking at markets and investing on a personal basis, and also being involved with auditing hedge funds and really working in financial services. But a really fun story for me, at least, was that I did a master's in business administration at Purdue University, and I had some fellow students there who were part of the investing club, and there was a point where they actually won this investing challenge against other university MBA students based on the small firm in January effect. And they won. They got invited to New York. They got to ring the bell. At the New York Stock Exchange. They're also interviewed in various media outlets. But the interesting thing is Purdue's a very quantitative school. It's known overall for its engineering program and being the mother of astronauts, they like to say. And within even the business school, if we can put numbers to it at Purdue, that's what's going to happen. It's a very quantitative school. So one of my classmates, is getting interviewed on CNBC and ended up really confusing the journalist. I forget who it was. I pick a name out of my memory, but I don't really remember. But let's say it was Ron Insana back in the day. It probably wasn't. But being interviewed and so, what names did you pick or whatever? And, just deadpan delivery and everything, and had to, inform this journalist that there really was no stock narrative about great things that they picked. They'd, done a quantitative analysis, a stock screen, picked, several hundred small caps that they thought were going to outperform, largely based on this phenomenon back in 2001 was the year. And, we remember we're all watching it, and we've got a very confused looking CNBC journalist, and, just sort of there explained, and then they quickly cut away, and that was the end of the interview. And, I guess it didn't go over that well, but they had won the contest based on this. So it was sort of a real world thing. But the reasoning behind it was not something where people who are looking for a fancy story about, a brand name CEO or one person, a founder doing something or whatever, because it really was a collection of looking at a quantitative screen and a few qualitative factors to go in, doing a multi-factor analysis and picking a large number of small cap stocks and realizing that over the course of the contest, which was running, a fairly short period into, over a year in and into the new year, that this January effect phenomenon could return outside returns to them if they did it properly. And those guys did beat a bunch of other schools, won a little bit of money for themselves based off of the January effect 20 plus years ago. So if you're interested in doing some more research on this, or even trading it as we get into January, you can run a stock screen on small caps and try and pick some names, much like my classmates at Purdue did. Or if you're just looking to take advantage of it through a whole index, a couple of Russell 2000 ETFs that you can get to are the IWM or the VTWO. So that's just a quick and easy way to buy the whole Russell 2000 and see if you can benefit from this. But, take a look at it. There's certainly no guarantee that smaller stocks are going to go up in this January or any January, but it might be worth your time to look into this and see if you can profit. So please let me know what you think of this video in the comments below, and remember to click, tap, or smash that like button, and also subscribe to this channel. Last thing I'd like you to remember is that finance may not be as easy as 1, 2, 3, but with a little work, we can make it as simple as 3, 4, 5.